Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The IMF says global growth is projected at 3% for 2025 and 3.1% for 2026, an upward revision from the April 2025 World Economic Outlook. This reflects front-loading ahead of tariffs, lower effective tariff rates, better financial conditions, and financial expansion in some major jurisdictions. But first, the overnight pulse dairy prices came in without the signalled drop in whole milk powder prices by the derivatives market. In fact, it rose 1% from the prior event. The skim milk powder price, however, fell 1%, so in fact little net movement. And the Stockholm US-China tariff negotiations are to be extended, essentially ignoring the US-imposed August the 1st deadline. And the US-EU deal wasn't done, as the Whitehouse claimed. More horse trading is being scheduled there. And the growth steam is slowly leaking from the Red Book Retail Index, up 4.9% last week from this time last year. Most of this will be goods inflation. US exports rose 3.4% in June from a year ago, whereas US imports were up 0.3% on the same basis. That reduced their merchandise trade deficit to $87 billion and back to about where it was at the start of 2024. Without the 11% rise in aircraft exports, there would have been little improvement. And the number of job openings in the US fell by 275,000 from May to 7.4 million in June, below market expectations of 7.6 million. Their quit rate fell to a 6-month low. Expectations for the July non-farm payrolls were pretty modest now, at 110,000, taking them back to early 2025 levels. And the latest Conference Board survey of consumer sentiment for July was little changed, but almost 19% of those surveyed indicated that jobs were harder to get in July, up from 40.5% in January. This group thought inflation was running at 5.8% currently and is likely to go higher. And there was a very well-supported US Treasury bond auction overnight for their 7-year note. But investors still wanted high yields, with the median coming in at 4.06%, up from 3.96% at the prior equivalent event a month ago. But expect rising pressure from the demand side. The US Treasury said that during the July to September 2025 quarter, they expect to borrow more than $1 trillion in privately held net marketable debt, assuming an end of September cash balance of $850 billion, which may be optimistic. This new borrowing estimate is $453 billion higher than they announced in April, so it is rising faster than even they expected, primarily due to the lower beginning of quarter cash balance and projected lower net cash flows. In Europe, the latest ECB survey of inflation expectations has them well contained, coming in at just 2.6% for the year ahead, the lowest in 4 months. Policymakers there are not battling high inflation expectations. Later today, Australia will release its second quarter CPI inflation rate, expected to be 2.2% and down from 2.4% in the first quarter. The US Treasury 10-year yield is now at 4.33%, down 9 basis points from yesterday. And the price of gold will start today at $3,327 an ounce, up $18 from yesterday. And American oil prices have risen $2.50 at just under $69 a barrel, while with the international Brent price now just over $72 a barrel. And the Kiwi dollar is now at 59.6 US cents and down 10 basis points from yesterday. Against the Aussie, we're down 20 basis points at 91.4 Australian cents. Against the euro, though, we're up 10 basis points at 51.6 euro cents. That all means our trade-weighted index starts today at just on 67.5 and down another 10 basis points from yesterday. And the Bitcoin price starts today at $117,725 and essentially unchanged from yesterday. Volatility over the past 24 hours has remained low, though, at just on plus or minus 0.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.